Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
That Disney story, again, the stock's up 9%, although it is down 9% for the year, so they got some work to do there. We're going to go to the analytical side of this story. Geetha Ranganathan, she is the media analyst for Bloomberg Intelligence based down in Princeton. Geetha, you followed this company for many years. Have they finally turned the corner? And can they become a stock that most people need to own?
I think so, Paul. I think, this turnaround story has now been in the works ever since Bob Iger came back more than 2 years ago. And it looks like, everything that he's kind of put in place along with the CFO, Hugh Johnston, is really working. So they did raise guidance, for the full year. But it's not just that. It's just the conviction in the outlook as you kind of look out and build out the earnings model for the next few years. I mean, we are basically looking at them doubling their EPS from close to almost $6 this year to well over $10, $11 in the next 4 to 5 years. So just a lot of conviction, I think, now in their long-term growth trajectory with those new parks, with the added capacity, with the $60 billion investment, with, the Abu Dhabi park, new cruise ships. Everything seems to be finally kind of coming together.
Last quarter, though, the question was about their theme parks. Prices are too high. The consumer's pinched. There was a competitor opening up a park in Florida, and everyone was kind of worried. What changed in 3 months?
Yeah, so they did say at that point that, summer bookings were strong. Of course, nobody really believed them. But, when they kind of reported the numbers today and you saw that 13% increase in operating income in the domestic parks are really the bread and butter of, the Disney theme park business, makes up 70% of revenue, then that has really managed to, I think, allay fears. And they, it's not just what they reported, Alix, it's what they said for the remainder of the year. So they said bookings are up this quarter 4%. They said advanced bookings are up for the fiscal fourth quarter 7%. And that is with that new Epic universe coming on board. So still demand seems to be really resilient. It seems to be strong. Even though there's a little bit of softness internationally, domestically, they seem to be in very good shape.
So, Geetha, talk to us about the profitability of their streaming businesses writ large here. How profitable are they? Do you think they can approach the profitability of, say, Netflix?
I think they can. Over time, they definitely can. So this year, Paul, we're looking at just over $1 billion in operating income.
Nice.
On a $25 billion in revenue. That's about 4-5% margins. But really what we're looking to, the North Star here is definitely Netflix, as you just pointed out. Netflix should get to 30% operating margins this year. So that's really what Disney is working towards. So even as we kind of build out, or we look at the earnings trajectory for that streaming unit over the next couple of years, I mean, we look at them getting to, 15-16% margins over the next 2 to 3 years. And then, of course, a lot more upside with, the pricing power, with subscription growth, with password sharing, with their advertising build out. So they have a lot of different levers that they can pull as well.
Is the goal to catch up with Netflix in terms of streamer subscribers? Is it about profitability? Like, what's the goal there? Because Netflix is so far ahead just in basic numbers.
Netflix is absolutely far ahead, and there's no doubt about that, Alix. They have well over 300 million subscribers just in terms of scale. Disney has about 125, so there's 125 million. So there's a lot of catching up to do. But there is one area where Disney is far ahead of Netflix, and that's advertising. They have a very, very good advertising infrastructure, and this is an area that Netflix is kind of really struggling with. And then remember, Disney has a big weapon that they can use with that ESPN. It's not going to be called flagship, I know, but with that ESPN streaming launch coming a little bit later this year, they have, they're spending something like $11 to $12 billion in sports rights that they are going to monetize from a streaming perspective. So that is where, they're going to have an unrivaled streaming product, even when you compare it to Netflix, because they're going to offer you entertainment, they're going to offer you sports, there's going to be something for everybody. So it's going to be, I think they can, I'm not sure if they're going to completely be able to match Netflix in terms of subscriptions, but they're going to be able to get to that profit number, I think, pretty quickly.
Geetha, if I'm an investor in Disney, do I just kind of write off what used to be the core business, which is the cable network business, and just say, it's in secular decline. I'm focusing more on the growing streaming business. Is that kind of the play?
That is the play ball across, and that's across majority of the space. So, yes, it's just kind of, humming along, if you will. Advertising is a big concern there. Affiliate fees, again, is in secular decline. We know other companies are actually trying to separate out their cable networks business just because it's been struggling and the outlook doesn't look good. Comcast actually is separating out its cable networks a little bit later this year. They even have a new name for that new business. And we kind of expect WBD, Warner Brothers Discovery, will do something similar. But yeah, I think it's pretty much, at this point, it's pretty much written off, Paul. The linear networks business is dying.
All right, Geetha, thanks a lot. Really appreciate Geetha Ranganathan, Bloomberg Intelligence Analyst on U.S. media on Disney earnings.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.